The RRSP Gross-up Strategy. This is a relatively simple concept that can help you contribute 40 to 70% more to your RSP without using any more of your cash. It's actually kind of magical. And if you do this every year, it means you can retire with 40 to 70% higher income, in your retirement. That would be quite amazing. So let me show you how to do this. First, let me show you a few background concepts that you need to understand. First of all, let's just talk about your tax refund for a minute. You actually have three options when you get a tax refund. You can spend it, you can invest it, or you can do the RRSP Gross-up Strategy, and I can show you how much more effective that is. So now remember, your tax refund, I think a lot of people think of it as, oh man, it's free money I got, and I can do what I want with it. But it's actually not free money. It's a loan from the government. So you contribute to RSP, you get a refund, but when you withdraw it from your RSP sometime later on in life, you have to pay it back. So just think of it as, a many-year loan. And, your financial plan helps you think about what is the best use of all your tax refunds. So now RSP Gross-up Strategy in short. So instead of contributing your tax refund, a lot of people get your tax refund, you put it into your RSP. Instead of doing that, you contribute an amount that's 40 to 70% higher in February. You contribute it from a credit line or from cash, whatever. Then in March, when you get your refund, you get the refund and it pays it back. So it kind of magically covers it, and you got the extra amount in your RSP. So to do it, you need to know what your RSP room is, what your marginal tax bracket is, and the concept of optimal RSP room. But it's basically how much should you contribute to your RSP every year? What's the best number for you? So first of all, marginal tax bracket. These are the brackets for 2024. Now we're in 2024, but if you contribute now, it's for the 2023 tax year. These brackets are slightly lower. So these are the detailed ones, which you can find online, but this is actually ones that'll tell you where. So the first 56,000, you pay 20%. Then after that, up to 107, you pay 30, and then up to 173, 43%, and then on and up to 54%. So I'm going to give you an example using someone makes 150,000 in the 43% tax bracket. All right, and then the optimal RSP contribution. This is like it's a really valuable planning concept to know. It's like, you got to contribute to RSP. How much should you put in each year? So, and it is the RSP contribution that one will achieve your retirement goal. And if you got a 100 plan, you know what it is. It'll maximize your RSP room over your lifetime. And it's the amount that gives you the maximum refund. So it's amount in your current tax bracket or a close bracket. It could be the maximum that your RSP, like it's limited by your RSP maximum. And it's also available how much cash you have available, how much credit you can borrow. Now, if you're doing RSP contribution, RSP Gross-up Strategy, then specifically you have a target refund that you're trying to get to. So these are kind of the numbers you use to determine how much you should put into your RSP. So here is the RSP Gross-up formula. Basically, you take how much of a refund you're already expecting. Let's say you're already contributing to RSP monthly, or you have other tax deductions for whatever reason, Smith maneuver or some other deduction. You're expecting a refund. You take 1 minus your marginal tax rate, and that gets you how much you should contribute, the gross-up contribution. Okay, so let's say you're already expecting a 10,000 refund. You're in a 43% tax bracket. So you divide the 10,000 by 1 minus 43, which is really dividing it by 0.57, like 57%, and you get 17,500. Okay, so contribute 17,500 in February from a credit line. And now what happens is your refund isn't 10,000, it's 17,500, and it pays it back. And basically, you've just magically found 7,500 that you've put into your RSP, and it didn't come out of your cash flow. You think, where'd it come from? But you got it in there. So now, just to show you how dramatic this can be, compared to contributing your tax refund, like putting the 10,000 in every year, you're putting in 7,500 more. And if you do that every year for 30 years, that's 900,000 more when you retire. So, and if you're a person that spends your refund now, doing this instead, you're putting in 17,500 instead of nothing, you have over 2 million more after 30 years. So it's dramatic how much difference this little strategy can be if you do it every year. All right, so now there's also another related strategy called the RRSP Catch-up Strategy, and it's really like the RRSP Gross-up Strategy on steroids. So basically what you do is you catch up, your entire RSP room or a very large amount in one shot, and it can be a total game changer for your life. It can make the difference between you're struggling to get by versus now you've got a high net worth. So now every case is unique. You got to really think it through creatively to come up with the best strategy, but it's a really cool strategy. So what you do is you contribute up to 5 years RSP contributions now, could even be more. Then every year, you think you have to deduct your entire RSP contribution, but you don't. You deduct only the amount on your tax return that gives you the optimal tax refund. So it would be the amount that's in your current bracket or a very close bracket. You carry the rest of the forward deduction till next year, which means you end up with several years in a row with large tax refunds. And then what you do is you take this large amount and you roll it into your mortgage. That gives you the lowest, tax rate or the lowest interest rate over the years, and your payment can be fairly low. So here's a kind of a simple example. Let's say you make 150,000 a year, you got 200,000 RSP room, you're 45 years old. So now what happens is, so you contribute the entire 200,000 to your RSP, you deduct 40,000, that's the amount that's worth deducting in your current tax bracket every year, which means you're getting basically a $20,000 tax refund every year for 5 years. Okay. Now you roll the 200,000 into your mortgage. Your payment's about $1,300 a month more, like 15,000 a year, but your refund is 20,000. So your refund is actually more than the extra payment. And this 200,000 grows to 930,000 after just 20 years. You're 45, by 65, you get an extra, basically $1 million extra just by doing this strategy once. You made one smart decision when you're 45, you have an extra $1 million when you retire. It's massive, the effect it can have. So the result is you've now maxed your RSP room. From here, you can try to keep it, maximized every year. When you have a huge amount of RSP room, like 200,000, you think, I'm never going to catch up, so why try? But you can catch up in one big step. So then your refund can be more than your payment for, for a number of years at least, and you retire way more comfortably. That's what work you can be from this. So now the third thing, more effective than both, is you can do a combination. You combine the RSP catch-up with the RSP gross-up. So you start by doing the catch-up strategy, so a big contribution. Then what you do is you're expecting now a big refund for 5 years, but you do a gross-up on that one every year and throw extra amount in. And now, you've end up with, 40 to 70% more than that RSP catch-up. So if the RSP catch-up alone would have given you $1 million extra at retirement, this combination can give you, $1.5 or $2 million more. It's amazing the effect this can have if you do it effectively. So now this was a very quick video to show the concept. I've got detailed videos and blogs and podcasts. If you look on my blog, I've got details of calculations of the gross-up strategy and the catch-up strategy and about this whole optimal RSP contribution. It's really worth yourself trying to figure that number out for yourself. And about RSP versus TFSA, which one is better for you, and how to plan your retirement interactively so you can work out the exact strategy that makes best for you. So there's lots of related strategies that you can get more information or see detailed examples of this. All right, thanks for listening. This is my name is Ed Rempel. My blog is Unconventional Wisdom. It's the #1 blog in Canada for a financial planner, and it's edrempel.com or unconventionalwisdom.ca. Remember .ca.com because it's Canadian. If you're interested in potentially becoming a client, you can get a free 30-minute consultation by going to edrempel.com/talk. Also, please subscribe to my blog, podcast, and YouTube. All that means is when I do a new one, you just get a little email saying what's there, and you can watch the ones that interest you. So the podcast is edrempel.com/listen, and the YouTube is edrempel.com/watch. Thanks for listening, and we'll see you next week.